Welcome to Real Conversations with Patricia Baranovsky-Schneider, the podcast that takes you on a journey around the world to meet some of the most inspiring and accomplished individuals. Discover their stories, uncover invaluable business lessons from their paths to success, and gain exclusive insights on how to apply their strategies to elevate your life and business.
Hello, and welcome to Real Conversations with Patricia. I'm your host, Patty Baranovsky-Schneider. Today, I'm joined by Andres Klaric, co-founder and co-CEO at Fuse. So welcome, Andres. Tell us a little bit about yourself.
Hey, Patty, how are you? Great being here. So, a little bit about myself. I was born in the US. I was born in Tennessee, but I was raised my entire life in Bolivia, hence the deep Southern accent, I could say. I spent my childhood and teenage years there, and by the time I turned 18, I moved to the US to start college. So I spent half of my life in Latin America, half of my life in the US. My first job out of high school was selling cars. I paid for college selling cars.
Wow. Okay.
And then I spent 10 years in Wall Street as an investor in tech and business services. Along the way, I had a pit stop in business school. And that was went to Harvard almost 10 years, no, almost 10 years ago when I started in. And then I stayed in touch with some of my colleagues there. When at the onset of the pandemic, I started chatting with some of these former classmates and decided to start a business. The first iteration of the business was in the auto lending space, and we quickly realized there was a broader use case to what we had. And here we are today, right? We're working with banks, we're working with credit unions, we're working with finance companies and credit funds. What we do is kind of help people get loans faster.
Nice. Yeah, I was going to ask you, what inspired you to co-found Fuse and how your experience on Wall Street shaped your vision for transforming the lending industry.
I think what inspired me was, I think just I remember applying for loans throughout when I was younger, right? And one of the typical one is financial aid, right? And I'm not sure if you've seen one of those applications recently, but at least in the early 2000s, when I was applying for college, it was Kafkaesque, right? It really took forever. It was so painful, so many requirements. It really felt I was like trying to apply for like the CIA, right? And all I wanted was just a student loan.
Yeah.
So, and that I think that first experience was a little bit kind of you have to go through so many hoops.
Yeah.
And I think that kind of like tells you, hey, like applying for loan creates friction. And I'm sure that like a lot of people's hopes and dreams are teared apart just by just how difficult that task is, right? Like I went through it, but like I'm sure that a lot of people just give up when they start seeing that. So
Right.
I from another perspective, I am a big believer in the multiplier effect of credit, right?
Okay.
And when banks, credit unions, lenders as a whole play a very important part in just like moving an economy. So
Right.
allowing them to be more efficient and in essence approve that kind of marginal borrower today is being told no, it's very important to me.
Right. I mean, it is true because I remember when I did the college applications with my daughter, I was signing stuff that I had no clue what I was even signing. It's really not self-explanatory, that's for sure. That's how people get in trouble.
Yes, exactly.
Yeah. But now, how did meeting your co-founder at Harvard Business School influence the development and success of Fuse?
I mean, it was huge, right? Like I think starting a business in itself is pretty hard. And having Mark has been probably the most amazing professional experience of my career, right? And that in it that it was something that I will always be grateful because he was just so thoughtful, so kind of focused on things that like complemented me in terms of my ability.
Nice. Now, startups often pivot to find the right path. So can you share the story behind Fuse's pivot and what made it a success?
Absolutely. So we first we realized pretty quickly that our customers at that point where we're direct to consumer were kept asking us, right? Like, who's your vendor for this? Who's your vendor for that? But the most common question and the overarching question was, who's your vendor for the origination system? And at first we didn't want to share with them because it was kind of like an internal proprietary tool. And when we realized that it had more value to actually commercialize that tool than just staying in direct consumer.
Mhm.
But you don't do that decision overnight, right? Like you, of course, have investors, you have employees, you have customers. So you need to carefully align everyone and communicate that outwards and also internally to gain conviction that that's kind of the right next step for the organization.
Mhm.
So once you have alignment, you communicate a clear timeline to everyone else, and you're very transparent with all the parties involved and the stakeholders. The decision kind of loses the difficulties that at first they
Mhm.
have, right? It has, right? And we were pretty careful about it. We also had like enormous conviction that that was the right thing for the business,
Right.
but it didn't happen overnight. It really took steps, and we let everyone kind of marinate in their mind that that was the right the correct decision.
Right.
And but we kind of showed them thoughtfully that why we wanted to go in that direction.
Nice. Now, you chose not to accept an offer from Y Combinator, a decision few founders make. So, what led to that choice, and how has it impacted Fuse's trajectory?
I think in hindsight, it was the right decision for that moment, right?
Okay.
I think if you ask me today, and we were like the type of business we are now, I would probably think twice. But you cannot go back in time. At that point, we had already raised our some capital, and we were a consumer business, right? Like speaking with other YC founders, based on what we were building at that point, which is what we pivoted away from,
Mhm.
the ROI of perhaps going to YC at that would have not been the usual.
Mhm.
So we thought, hey, like we would love this to do this. It just didn't make sense for
Mhm.
us, right? Of course, we read on blogs that people negotiate and the valuation, all of that.
Right.
We did try all of that, and of course, YC is not going to uh, accept that, right? Like they're an amazing organization, and of course, through other friends and founders and colleagues, we've come to kind of become more familiar with how they think, and uh, uh, I still kind of treasure that moment of being accepted. Um, I think having had the MBA and other experience, we felt that at that moment that it was not what we needed to do.
Right.
It had we been building Fuse, maybe I don't know.
Right.
It's a hypothetical that the good thing is I already had to answer once. The second time we'll see.
Yeah. No, I mean, you always say, timing is everything. It wasn't the right
Mm.
time, and that's totally fine. And you proved
Yeah,
yourself, which is, really cool.
yeah.
So now tell us, what are some of the key challenges in the lending industry today, and how does Fuse address them through innovation?
Well, some of the key challenges is that regulation is I mean, obviously, like you have consumer protection laws and
Mhm.
things like that, but the biggest thing is that precisely because of those regulations, lenders are pretty kind of like when you think about the technology, for example, you see in a DoorDash or an Uber, um, it's kind of at the forefront, right? Like, and usually financial institutions are a little bit wary of like perhaps adopting that technology because of
Mhm.
the risk of regulatory risk, compliance risk, you name
Right.
it. And they're some of them are probably in systems that are like 30, 40 years old. And I would say that the folks that are at the forefront in this particular space are more like are like 15, 20 years behind, right? Like the curve. So what you see is that uh everyone is kind of at this stage in which um paper forms were digitized, but that's kind of where it ends, right? Like you still need to fill it out 20 times.
Yeah.
It's not really a magical experience, right?
Right.
And customers are not dumb, right? They know that a much more intuitive, frictionless experience exists. It just doesn't exist in their bank, right? So we kind of help lenders go to that level of adoption, being able to integrate to the best-in-class tools, being able to actually delight customers and kind of replicate that experience that customers are already having in other sectors of the economy.
Mhm. I think it's amazing because, you know, you could have an MBA, but it's still for an average person to do any of this, I mean, you don't know what goes on behind the scenes. You don't know, all the intricacies of what's needed, why it's needed, where to get it. I mean,
Yeah.
so having someone kind of hold your hand and say, okay, let me guide you through this process and make it easier for you. Take a lot of the
Yeah.
burden off. It's because it's already stressful.
Exactly. Or not even guide you, like kind of pre-fill all of that, right? Like
Right.
there's a ton of information that's already out there when I think about open banking and rules like that, or like just the data that's available just with your phone number. You can actually help that customer make get to a point in an application or opening an account or getting a loan that doesn't really require them to burn that many calories, right?
Right.
And do it without impacting their credit, right? All of those things I think are at the forefront of what we're trying to achieve here.
I think that's amazing. So now can you, I guess, explain how Fuse's loan obligation system, the LOS, uses low-code APIs and self-serve customization to simplify lending?
Absolutely. So we come to realize that uh, financial institutions have a ton of like core competencies, right?
Right.
But they also need focus. And what we recognize is the inherent tension that exists between technical teams and non-technical teams. Not every financial institution can be hiring a very expensive engineers for every single role. They need to specialize in certain things. So what we help them is alleviate that inherent tension between technical teams and non-technical teams by empowering the non-technical teams to kind of do the day-to-day changes, right? So, for example, rate sheets or like certain underwriting rules that exist, instead of having to explain to an engineer why, like, because rates change and this is why we're changing things and we need to update this part of the model and go and change something in the world of zeros and ones in code, you can just do it in a dashboard, right? So that is very important to kind of elevate the role of the non-technical team and free up the technical teams to do more strategic work versus like very busy tactical work that sometimes bogs them down.
Yeah, I mean, it's funny. I always use the term stay in your lane. It's so much easier. Stay in your lane. You do what you're doing. Let me do the technical aspect. Let me do the
Mm.
research. And it just makes everything a lot easier, smoother process, and a lot less stressful. So, I mean, that's good that you're doing that. Now, as a co-CEO, how do you balance the technical innovation of Fuse with the demands of running a business?
Uh, they, at the end of the day, our customers want us to like be at the forefront of innovation, right? So it's just part of the job, right? Like be having the ability to deploy solutions that are flexible enough to really build on them and robust enough so that they don't kind of age, right?
Right.
So and also like by virtue of building a very big ecosystem of integrations, you assure yourself that you're hedged against that risk, right? Because essentially, like if you cannot provide it, your system is open enough that you can actually work with outside parties to supplement or completely like complement something that you don't
Mhm.
have as an,
Yeah.
and let your
No,
customers choose
yeah.
that.
Yeah, that's good that you're giving them choice because you're expected to do A, B, and C, but if you can, outsource or offset and focus on
Mhm.
the core part of it, I mean that's actually really good.
Yeah.
So as a VC-backed startup, what lessons have you learned about fundraising that other entrepreneurs could benefit from?
I think that the it's a choice, right? Like obviously it's not a choice in terms of like getting into fundraising, right? It's
Right.
very, but not everyone needs to go the VC route. The vast majority of founders don't, right? And it's a function of like not wanting it and also very getting VC funding being very hard, right? I would say for the average founder, the best path is just uh doing a little bit of um investing your time but also your money or your own money early in the day with like enough capital that you feel that you've give it a try but also that you're not completely like endangered your future economic well-being, right?
Right.
The most important thing aside from that is setting up clear timelines in terms of like how many years or months am I going to give myself to reach certain level of traction with the business before I determine that that's kind of the right business, right? Like, so is in the early days, you're probably going to have a good number of ideas. Just see the one that actually gets the most traction on a finite timeline. Otherwise, you're gonna find yourself just going in circles. And once you get that level of conviction, you can actually you will get at a point in which like you either have enough traction that like perhaps you want to bootstrap it, or like the story is compelling enough to perhaps bring in angel investors or VC capital. But I think most founders will understand when that the business have gotten to that inflection. um, in our case, the reason why we decided to go the VC route is because first and foremost, we got lucky enough that people believe in the story, and second, because it allows you to get faster to the truth. It brings a lot of discipline. It allows you to scale very quickly, and for me, like time is of the essence, right? So going back to the idea of like setting finite timelines for yourself.
Mhm.
Definitionally speaking, VCs also set finite timelines for you because they want
They want return.
an execution, a return. They have their own like holding periods and things like that. So that in itself, I thought was aligned with the way that we were wanted to do things.
That's perfect. So it seemed like a perfect match for you, which is, perfect. And it is true because I know people like looking to raise, especially like post-COVID, everybody was an entrepreneur trying to raise capital, and they were reaching out to everybody under the sun but you have to do your research. Not every one of them has your best interests at heart. So it's good. You definitely knew what you were doing and you did it the right way, which is perfect.
I was lucky to start a business with a founder, like an experienced founder. Like my co-founder had actually done it before. So there's just so many mistakes you make, right? Like there's the split between lead funds and follow-on funds. How do you actually approach the fund? There are entire playbooks and hours that one can actually spend explaining how a good fundraising process is done.
Mhm.
And it definitely helps having someone that already understood that.
Yeah, no, for sure. So now where do you see the lending industry heading in the next 5 to 10 years? And how does Fuse fit into that future?
I think that, of course, with the advent of AI and things like that, it is just going to become increasingly easier to get approved for a loan. It's going to become increasingly harder for lenders to differentiate themselves. And like I think that the way that they differentiate themselves is that convenience, that speed of execution, that how frictionless they are in their application process relative to their peers, right? Like imagine a world in which like you go on a website and instead of just being an offer, your typical Affirm like buy now, pay later, the website already knows kind of who you are. Like they start showing you everything kind of with pre-approval, with actual approvals, right? So you can actually say like, hey, you can put on this card, or you can put a buy now, pay later, and you don't even need to apply, right? Like the system already kind of knows.
Mhm.
I foresee a lot of things like that happening. I would say perpetual approvals by your bank, meaning like you already have lines of credit,
Mhm.
and of course we will see how credit scores evolve, and how do we understand risk, right? Especially as work changes, like
Mhm.
how we're going to think about job safety, so many other things that like
Right.
as a it's going to be very interesting
Mhm.
next couple of years.
Yeah, no doubt about that.
Mhm.
That's why it is tricky because you have a lot at stake. You have the job security. And it is funny how like the algorithms of it all, digital, nothing's sacred anymore. It's like I walked, geofencing and whatnot. I walk down the street and, my phone, if it's on, Wi-Fi, everybody around me knows who I am, what I've done, where I've eaten, what kind of food I like, what kind of clothes I shop at. And as you start getting these, I mean, this is now, so I can imagine 5, 10 years how it's going to be.
Yeah. Right
Mm.
now you have the very inaccurate way of doing things because you're getting the spam. Imagine that kind of being more tailored and actually knowing you, right?
Right,
Or depending on like the permissions, right? But
right.
uh think about like how I mean, I don't know how much you use like the chat GPTs, the Anthropics of the world, but like some of the magical things about using those, it's pretty nice to see it happen, but it's still you're still copy pasting. It's still clunky, right? Like
Yeah.
imagine a world in which you're like just thinking about those things. You want to search, and like they're all kind of connected in the data that they spit out is actually something that is beyond. It's better than what you can do today, right?
Yeah. I mean, it's funny when we think like 5-10 years, but it might even happen sooner. I mean, just think a year ago, how much it's advanced. 5-10 years. I mean, I see the movie I, Robot in my head. It's like, this is going to be the world we're living in.
Yeah, I mean, there's definitely like the downside risk, but I think overall I'm optimistic, right? There's 6 billion plus of us, right? So I'm sure that hopefully we're more or coordinated than anything, that like the negative aspects that could come from that. I don't think like the negatives would necessarily be immediate, but of course it's going to be like the mobile, the internet brought its own negative things. So mobile, like the industrial revolution, but the human race is pretty adaptable and resilient.
Yeah, I'm excited. Yeah. So now, what advice would you give to entrepreneurs looking to disrupt traditional industries with technology?
I think like I was touching on that in terms of like setting themselves with clear timelines. I would say try to launch as soon as possible. Have a minimal viable, not product, a minimal viable test for your idea, so you can actually validate it quickly. Because if you kind of try to build something ultra perfect, sometimes you might go out to market and no one wants it, right? So the sooner you're actually talking with boots on the ground, with people that actually you think will be a good customer for that, the better, right? Like it builds that feedback loop is incredible, and it accelerates things quite a lot.
Yeah, awesome. Now, anything else you want to talk on that we didn't already touch on?
Not that I can think of.
Yeah. All right. Well, how can people get a hold of you, learn more about you and what you do and views in general?
LinkedIn is a great source. I've had great mentors through my career. So my Andres Klaric in LinkedIn, and like I'll do my best to respond as soon as possible.
Okay, nice. Well, thank you again for being on the show. Again, that was Andres Klaric. So thanks for listening to Real Conversations with Patricia. Never miss an episode by subscribing to the channel. So thank you again.
Thank you for listening to Real Conversations with Patricia, talking with some of the most brilliant minds on their journey to success and their recommended strategies. Please leave your feedback and visit pristineadvisors.com to get the latest and greatest business advisement on the planet. Feel free to let me know your thoughts, suggestions, and anything else you'd like me to cover. Together, we can make success happen for all.